Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, the private sector pushes for the privatization of the EDSA busway. The Bangko Sentral sees inflation in May to ease within the range of 0.9 to 1.7%. Peter Garnace, equity research analyst at Unicapital Securities, joins us live. And China's factory activity fell to its lowest reading in nearly 3 years amid trade uncertainties. Transportation Secretary Vince Dizon has acknowledged that the public transport modernization program is no longer viable in its current form. Speaking before the Commission on Appointments, he pointed out that many transport cooperatives are struggling to repay loans for modern vehicles. He also noted that only around 40% of public utility vehicles have consolidated into cooperatives, as required by the program. Additionally, less than 20% of local government units have rationalized routes, which further hinders the program's progress under its current design.
Given the present state of the modernization, and kung itutuloy-tuloy lang po, tingin ko po, yung fact na hindi na nakakabayad ng utang ang karamihan sa mga bumili ng bagong mga sasakyan, that is a clear sign that it is not viable in its present state.
On the EDSA rehabilitation, Dizon says the estimated cost will reach 15 billion pesos if the rebuild will last until 2027. He reiterates President Marcos's order to postpone the rehab does not mean the plan is canceled. Our next guest from the private sector proposed the now dedicated inner lanes for buses along EDSA, enabling them to traverse the highway without interruption. Based on the Transport Department's data, the EDSA busway serves more than 170,000 commuters, making it one of the busiest transport modes in Metro Manila. Let's check back on how he thinks the government ought to plan for EDSA's rehab. Joining us for more, Eduardo Eddie Yap, the chair of the Management Association of the Philippines Traffic and Infrastructure Committee. So good to see you again, Eddie. Welcome back to the program.
Yes, thank you, Cathy. So nice to see you with you again.
So you're recommending that the contract for the busway privatization be fully awarded this year. And I realize that you've been following this up for over several years already. So why should the government listen now with more urgency?
Well, you're right that this project spanned 3 administrations. It started during the time of Duterte, and then Duterte, and then this administration. Now, I would say that this busway dovetails closely to the desire to have a modern EDSA, because as announced by Secretary Vince Dizon, the solution to EDSA congestion is mass transit. Correctly so, because this is also stated in the National Transport Plan of 2017 that there should be reliance on mass transit rather than private vehicles.
That's so true. I mean, there's so many merits about having a bus rapid transit system, especially when we don't have a train system, not available yet. We've seen it in other countries when you go to places like Jakarta, maybe even Guangzhou. They do have that viable transport system set up in their major highways.
Yes, well, true. Now, on EDSA, you know that we have this MRT3, which is functioning, and then the other one is partly the subway, and then thirdly, the busway. Now, these 3, I would say, would be adequate to meet the needs of commuters on EDSA. Now, the private sector lanes would be to augment this transport mode.
Well, let's pick up on that and give everybody a visual of what we're talking about, because I was surprised that it's a presentation that you made 10 years ago, going all the way
Yes.
back to 2015. And
Right.
I was actually asking you whether you had a newer presentation, but I guess that it really goes to show that something that you proposed, that the private sector proposed 10 years ago, still is very
Yes.
viable in today's time.
Right.
Could you take us
Yes.
through this diagram here and what really and how it will benefit the commuter experience?
Well, the busway is a tested system being used abroad in Latin America, in advanced countries, China, and others. Uh, the it is just a matter of adapting what they have done abroad here, so that we can get the benefits of this modern transport system. The other one, this one, is a visualization of what we mean by having a green EDSA. The sidewalks are planted with trees in order to shade commuters and pedestrians.
Yeah, I'd love to see those trees, but at the same time, I was actually very attracted to the wider platforms, because right now, that's what
Yes,
we need
right.
for our commuters
Yes,
who are standing in
right.
line to get their bus ride. Timelines appear to be an issue. I've mentioned 10 years, but what is the recommendation now for that busway to be completed? And within what timeline, considering that the bidding is already over?
Yes, from what we know is that this year is supposed to be the bidding of the busway. Now, there are several modes of implementing this busway program. One is there should be one contractor for the bus service and the infrastructure, while the other one is to separate the two into two separate contracts. Now, it looks like the separate contract has merits because the infrastructure is still ongoing, and while the bus is already operating. So we can say that if worse comes to worse, the busway infrastructure is not yet ready, the bus operations may proceed. And that one may include from Commonwealth Avenue in Quezon City up to all the way to EDSA, terminating in the Parañaque bus terminal.
That appears like a viable solution, just one part of the many parts that we have to implement there, because this is a multi-sectoral activity. This is why I really appreciate the time and the insights. Eddie Yap, thank you so
Yes.
much for joining
Yes.
us from the Management Association of the Philippines. You're watching Money Talks. Coming right up, the national government's outstanding debt hits record highs in April, and Hotel 101 Global Holdings is set to debut on the NASDAQ this month. Keep it here on One News. Money Talks. I'm Cathy Yang. China's factory activity fell to its lowest reading in nearly 3 years because of U.S. President Donald Trump's tariffs. That's according to a private survey conducted by Caijing and S&P Global published on Tuesday. China's Purchasing Managers Index declined to 48.3 in May from 50.4 in April, the lowest since September 2022. The PMI falling below the 50 level mark signals manufacturing sector conditions deteriorated midway through the second quarter, according to the report. The result is aligned with China's official PMI data released on Saturday, which showed factory activity sliding for the second straight month. Wang Zhe, a senior economist at Caijing, attributed the decline to increased uncertainties in the external trade environment. China and the U.S. traded accusations over the weekend of violating the deal they struck in Geneva to diffuse trade tensions. Meanwhile, Trump is set to waive legal requirements to boost production in critical minerals, aiming to reshape an industry dominated by China. China is using minerals as leverage in its trade war with the U.S. by recently halting exports. According to Reuters, Trump will apply a Korean War-era law to loosen some restrictions on minerals, which are used to make chips, robots, and weapons. The world's richest man is calling Trump's proposed tax and spending bill, quote, a disgusting abomination. Fresh from ending his 130-day government stint, Elon Musk criticized the measure in a series of tweets for potentially raising the deficit and making America bankrupt. The tech billionaire, who has long blasted the bill, said House members who voted for it know they did wrong. Musk's messaging blitz has signaled a widening rift between him and Trump, despite showing public admiration for each other. The Tesla CEO led the Department of Government Efficiency as a special employee to pluck out perceived waste in the federal budget. And markets gained Tuesday amid strong earnings season and optimism that Trump's tariffs won't tip the U.S. into a recession. The Dow and the S&P 500 both gained by 0.5%. The Nasdaq climbed 0.8%, turning positive for the year for the first time since February. Benchmark 10-year Treasury yields inched slightly lower to 4.459%. Gold prices also declined to $3,350 per troy ounce. And stock futures are moving little as investors await for Trump and Chinese President Xi Jinping to speak. All three major indexes are up by less than 0.1%. As for Asian markets, they're rising at the get-go this Wednesday, so you can see the green arrows there. Australia's ASX 200 up 0.5%, Kospi Index up 2.3%, hitting a 10-month high. And Japan's Nikkei 225 climbs by 0.8%. And let's take a quick look at our own markets this Wednesday and see how the Philippine Stock Exchange is open today. Looks like it's a slightly higher open at 6,420, up about 0.1%. PSCI gained yesterday, Tuesday, by nearly 1%, with all the counters in the green except for financials. Meanwhile, the Philippine peso opens today slightly weaker, 55.80 to the dollar. Peso closed yesterday a tad weaker at 55.721 against the greenback. Well, with us now for more is Peter Garnace, the equity research analyst at Unicapital Securities. Welcome back to the program, Peter. Thank you for joining us.
Thanks, Cathy, for having us.
So it looks like the disinflation trend is still very much intact, and that's what you're looking at in terms of markets.
Correct. Yes, we think that inflation is still on a disinflationary path right now, and this is driven by three factors, we think. First would be the rice prices. We think that rice prices would continue to go down. If we take a look at the April inflation, rice prices back then had a deflation. That means that a negative growth of around 11%. And then the second factor is in terms of transport. So we are also thinking that there will be a deflation in the transport, especially that fuel. We have seen fuel prices, especially the global oil prices, have also come down. If we can recall, last year, fuel prices was around $80 a barrel. Now it's hovering around $60 a barrel. So that's most likely gonna bring down inflation as well. And then the last point would be the peso appreciation. So year to date, peso has appreciated by around 4%. So it's strongest since 2023. And we think that this will also ease down the import inflation that we are experiencing as well.
So you get a bang out of your buck if, for instance, you want to travel overseas, you can spend a little more because the dollar is so weak. But then I'm looking at inflation in a more cumulative basis. If you take a look at the accumulation of inflation over the COVID pandemic, then you might want to rethink, are consumers really spending because they're seeing these inflationary numbers go down? Because they're still being affected and feeling the after effects of cumulative inflation from 3 years ago.
Right. If we take a look at the data on inflation in the past 2 to 3 years, I think it's around 15 to 20% cumulative inflation. And it is actually, yes, you're correct, it's affecting the household balance sheet. But if we take a look at the first quarter GDP, the household spending grew by around 5.3%. And it's actually one of the strongest in the past few quarters. And this means that our consumers are really resilient. The household spending is resilient. So there's dry powder in our consumers.
And also maybe more to stock up, more money to stock up on the basic goods. But if you're, let's say, trying to buy a condo, maybe a house, and you know that mortgage rates might go lower with the Bangko Sentral cutting rates further, then that consumer might want to just take a step back and say, I'm going to wait. And I'm not going to spend right now on a new home or a new condo.
Right. It's also good to wait for when the interest rates are going to bottom out for our consumers to buy, let's say, for example, big ticket spending, for example, the condominiums. So it's also okay to wait.
Okay to wait, but it's not good for the economy, though. I mean, you know, there's no movement there. So this wait and see game also seen in the property sector.
It's a wait and see for the property sector, yeah.
Right, which brings us to the interest rate outlook then for the Bangko Sentral. Seeing that, yes, there is this inflation, how much of a rate cut then is the Bangko Sentral going to make in view of how the Federal Reserve moves? Because it also has to watch that interest rate differential.
Right. Our expectations for the second half of 2025 would be around 50 bips rate cut for the BSP. It may happen in June, it may not happen in June.
Why not?
Given the uncertainties globally, the lingering effects of trade war, I think BSP would be stay measured, calibrated in terms of their policy easing, given the potential inflationary pressure of the Trump tariffs. Although, of course, they have the room to cut rates because our peso right now is the strongest since 2023. So they have room to cut interest rates. But in terms of the timing, that we aren't sure yet.
Will the markets be happy with that if they don't move on June 19?
Well, I think right now the market is pricing in an interest rate cut, 25 bips by June.
So they wouldn't be happy if the Bangko Sentral did not move on June 19?
Most likely, yes. But in terms of inflation is on a downtrend, as we've mentioned. So market would still be, happy. They're still expecting sooner or later the Bangko Sentral ng Pilipinas would cut interest rates.
Yeah, well, what's happy these days in the markets? Because there's a lot of wait and see. I mean, I've just had Japheth Antiangca yesterday of Philstocks Financial saying it's a wait and see. Right. At a time we're looking at this financial year where, second half, people just buy equities.
Yeah. So
down to Christmas. So it's a better picture out there, whatever happens.
Right. So despite the risks, despite the threats that we're seeing amid the trade war uncertainties, we think that there are silver linings in the stock market. We are thinking of the yield-sensitive stocks to recover, as well as the dividend stocks to also be attractive right now. If you take a look at the yield of our REIT stocks, you can lock it in at around 6 to 7% right now, and also our dividend plays. You have the utilities, you have the telco stocks, you have PLDT, Meralco, or you have also Manila Water. They're giving attractive dividend yield right now.
So if, for instance, an investor got into those dividend yield and high-yielding stocks, how much would they have earned in the first 6 months this year?
Well, yeah, I think as mentioned, the yield is around 6 to 7%. For PLDT, for instance, they're giving around 8%. So I think that's the highest for the utilities and the telco sector. So 8% yield.
Okay, another way to slice and dice the uncertainty there, the wait and see. Park your money into dividend and high-yielding stocks. Well,
Yeah.
thank you so much for joining us, Peter. Appreciate the
Cathy.
insights. Peter Garnace of Unicapital Securities. And coming right up, the first Philippine Polymer Banknote Series bags Best New Series Award. Keep it here on One News. You're watching Money Talks on One News. The national government's outstanding debt rose to a new record of 16.75 trillion pesos in April. That's up by over 0.4% from March and 11.5% higher year on year. The Treasury says the uptick was minimized by the significant appreciation of the peso, which reduced the effect of additional borrowings in line with the fiscal program. Over 69% of the debt came from domestic sources, while external obligations took the rest. Hotel 101 Global Holdings is set to debut on the Nasdaq this June. The U.S. SEC approved its listing under the ticker HBNB. Hotel 101 is a subsidiary of Double Dragon Corp. And was formed after merging with JVS PAC in April last year. Hotel 101 calls this a major step towards becoming the first global one-room hotel chain. Its CEO, Hannah Lucchini, says the listing supports global expansion, including in Japan and the U.S. It is also set to become the first Filipino-owned firm on the Nasdaq. Following the news, Double Dragon shares now trading up by nearly 5% from yesterday's close. Here are the headlines. headlines from around the globe. In the United Nations, 5 countries won seats in uncontested elections of the UN Security Council, the organization's most powerful body. Countries elected for a 2-year term starting January 1st, 2026 include Bahrain, Colombia, Democratic Republic of the Congo, Latvia, and Liberia. The Council has 5 permanent members, while the 10 are being chosen by the General Assembly annually. The Council is the only UN body that can make legally binding decisions, such as imposing sanctions and authorizing the use of force. In South Korea, opposition leader Lee Jae-myung has been elected president in the snap elections, which were called after his predecessor declared martial law that drove him out of office. Lee garnered 49% of the vote against his opponent, Kim Moon-soo, of the ruling Conservative Party, who got 41%. This year's polls surpassed 79%, the highest since 1997, according to the National Election Commission. Kim has conceded defeat in an election widely seen as a referendum on his party and its former leader, Yoon Suk-yeol. And in the Netherlands, Prime Minister Dick Schoof handed his resignation to the king after the partner in the right-wing coalition government withdrew over a dispute about migration policy. The move by Geert Wilders of the far-right PVV party ends a tumultuous coalition that lasted 11 months. Wilders said and his partners refused to sign off on proposals to curb migration. The PVV party has been advocating to prohibit asylum seekers from entering the country, ban the Quran, and close Islamic schools. A caretaker government is on place until a snap election occurs, which is unlikely to happen before October. And before we go, the Bangko Sentral ng Pilipinas has received the Best New Banknote Series Award for its polymer bills. The International Association of Currency Affairs has announced the honor in Bangkok, Thailand. The award-giving body lauded the first Philippine Polymer Banknote Series, or FPPB's, securities features, overall design, and use of local elements, particularly flora and fauna. IACA said it serves as a testament to the Philippines' rich culture and natural heritage. The Bangko Sentral launched a series with a 1,000 peso bill in 2022, followed by smaller denominations in 2024. It said the recognition affirms its commitment to secure and sustainable currency. I kind of miss holding a polymer bill there with digital wallets all around. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.